Good morning, gang. Good morning. Good afternoon, good evening, or good night, depending on where you are in the world and what time you are watching this. Welcome back to today's Bitcoin update. While we sit at 63,000 United States dollars. Unbelievable. What a couple of days, what a few weeks, what a year it's been of up-only price action. And just wanted to take this time to give you guys a little sneak peek into the course. Now, this is dating back to our first ever chat and chill that we do with the group. Now, for those of you who are not aware, every second Tuesday we do a high time frame swing trading video talking about my swing trade plans. Now, obviously, this is not a signal service, but we talk through Elliott wave counts, we talk through local TA, we talk through macro TA on Bitcoin, stock market, Forex, you name it, we talk through it. At our first ever chat and chill that we did back on the 12th of April 2022, this was one of the plans that we were talking about within the group. We were talking about what a bottom formation would look. Now, don't get me wrong, first and foremost, I just want to make this really, really clear that this wasn't my only plan. Okay? You guys watch these videos and follow Spitfire Traders because we're not full of bullshit like some of the other guys. So this was one of various Elliott wave counts that we had, but this was one of the plans. And we were talking about how we would drop down, we would find support, we would find more some resistance, then we would drop down to the support, take the lows, and then that's more likely how a bottom would look. Now, fast forward that to what has happened. And as we can see here, we came down to the magical green boxes, found support, we bounced up, found resistance, found support, took the lows, and now we are back up to where we are right now. So once again, I just want to reiterate, this is no crystal ball, this is no hindsight, this is understanding where the macro sticky zones are on the chart, and if those macro sticky zones give you a trade opportunity, then you take it, and sometimes those trade opportunities, if they are at macro levels, can turn into good swing trades. Okay? And thus where we are today. Now, don't get me wrong, I get plenty of these wrong, so I'm not going to sit here and laugh. I get plenty of these wrong. The whole move down, we nailed the majority of the pivots. Where have I got more wrong? I've actually got more wrong within this zone here, because this trend has been so strong to the upside that the high time frame macro resistance levels are not really in offering anything. All they've been offering, let's go back again, I went back too far, are range plays. Range plays. Okay, similar to here. They've not given the follow through to the downside. So I know a lot of people, for example, on Twitter are giving people like Capo a really hard time. And to be fair, does he deserve a hard time? In a sense, yes. Because too many people are following along, but that's what happens with influencers. It's all right having a bearish bias for new downside, and it's all right having a bullish bias. The thing when it comes to mapping out Elliott wave or high time frame areas of interest like we do, and hopefully I don't know if you can see this on your screen, but you can see that I've got high time frame areas of interest on the side here, is you've got to play what the charts give you. So if the charts don't give you the follow through to the downside, like this zone here, didn't give you the follow through to the downside, you've then got to quickly flip your bias and look for more upside and just continuing this overall trend. So it's something you really got to pay attention to. Okay, now before we get into what I'm looking for next, first and foremost, big shout out to our partners over at PrimeXBT. If you don't know who Prime are, they are a non-KYC crypto exchange, but the beauty of these guys is you can not only trade crypto, but you can also trade Forex, stocks, and commodities. Okay. Now, if you do want to check them out and you want to support the channel, use our link down in the description. It is an affiliate link, but you guys can get up to a $7,000 deposit bonus. So yeah, if you want to check them out, go do so. If not, no problem. Okay, right, moving on. So since our last video, price action was within this range. If we zoom in to a 30-minute chart, you can see what happened within this range. Now, I'm not going to talk through the other trades in this range because you guys know, because we talked about that in detail on last week's video. But we had, as a recap, this lovely range to trade highs and the lows. Right on my range fib, there we go. Highs and lows, in fact, have I drawn that in the wrong place? No, I haven't, I've drawn it in the right place. Highs, lows, and the bottom of the range was actually capped off by some single prints. We had some single prints. Now, again, some ICT style traders and those guys will call this something else. But the reality is that gap on the 30-minute candle was a block of single prints. Now, typically speaking, single prints can act as support, and they can also sometimes go through just as fast. Just like Alta, sometimes this, sometimes that. So it can go through it quite fast, which is why, as you guys know, I was looking, if we were going to break down out of this range, I was looking for this zone here. I talked about that in last week's video. Go check that out if you didn't. Now, following on from last week's video, when we were around here, we came back down into range lows again, got a bounce, got a higher low, and then we've broken to the upside. Now, one thing I'm going to make really clear is I didn't end up catching this next trade. You guys know that I got a long down here, ended up getting stopped out after the first take profit, came back down to these range lows before the pump to the upside. Now, one thing I didn't end up taking this trade, and it was quite annoying because this was on Friday night about 11 o'clock my time, which is UTC time. We came down and we didn't end up sweeping these lows. Every other exchange out there swept these lows. So this was a trade I was ready to take. We swept those lows, got back inside the range. We would have had a nice trade there just to continue the range. And obviously, if it did break out, we could have let this run. But we wasn't to know that because we don't have a crystal ball. But we never actually came down and swept these lows. Okay, so every other exchange, Coinbase, Binance, pretty much every exchange swept these lows, but this one didn't. So therefore, for me, there was no trigger, unfortunately, for a long. I'm still holding long some lower, but I know some of the guys in the group got it, but obviously I trade the Bybit chart and it didn't sweep the lows, so therefore there was no trade. Since then, obviously, we've pumped to the upside. Now, longs have been the play. Okay, so some of the trades we've had in the group, we have actually had some really good scalp shorts, and I'm going to talk you through some of these now. I've not got them pre-drawn out because I'm going to talk you through them in real time. Okay, so we're going to zoom in to a 15-minute chart. We can see this, and I'm going to talk you through, hopefully, so you guys can understand how to trade these trending environments. And it all comes down to a range. And it sounds quite counterintuitive, does that? Because there's a big difference between a trend trader and a range trader. However, when you've got a nice range, things become a lot more clear and it's easier to get the entry criteria. So if we look at this consolidation here, so this was on Tuesday, and I was coming into the group on Tuesday. I was telling the guys, this was after we'd already put the high on at 2 o'clock in the morning. I'm doing my daily update around 9 o'clock UTC time, after I've taken my little boy to school. And then all I'm doing is saying, quite simply, we have a range. Okay, we have a range. Now, once again, what happens within these ranges? Well, we see a lot of FOMO. So we had the range high, we had the range low. Okay, so spotting these ranges nice and early. What did we do? We came up, and we just took out the high. Just took out the high, little mini swing failure pattern. And there was lots and lots and lots of traders that FOMO longed this because, once again, they've got into bad habits. This trend so far has been very forgiving on bad habits. Very forgiving. You know, we've got traders that are doing things like this. Okay? Giving these kind of setups. And they are rewarded for it in the end. Do I think that's a good way to trade? No, I really don't. There's way better ways to trade. But people are doing it and they're getting rewarded for bad habits. But what's happening is, you can see, first attempt of a breakout. It's very rare that it continues. Okay, so we just get a little swing failure pattern. So in here, we had a nice short trade back down to EQ. But because we're in such a strong trend, we're rarely losing the EQ. So what did we do? Came back down to EQ. We got to bounce back up. Another swing failure pattern. Back down. We front run the EQ this time. And then we've continued to the upside. So if you're smart about things and you understand TA and you learn how to spot these ranges, you need more confluence than just this. But if you're breaking it down to the most basic, simple ways to trade, this is a very simple way to trade. Okay? Spot the range, spot what's happening in the range, what we're doing, well, we're spending most of the time in the top half of the range. What does that mean? Well, we are consolidating under resistance, which arguably is bullish, especially in the context of things that we are in a strong uptrend. And we broke up. Okay. Then that leads us into yesterday. Okay. We're going to zoom down to a 5-minute chart with this. And we're going to talk through again what happened yesterday. Now, yesterday, the guys in the group had an absolute blinding day thanks to this liquidation wick here. Okay. Now, what do I mean by that? Well, here's our Discord. People having a blinding day longing that liquidation wick. It was such a great setup. Now, if you're watching this in real time, especially if you're on a low time frame like the 5-minute, this looked very, very brutal. Okay, just like the next one did up here, which we'll talk about in a second. It looked brutal. And we know full well that a lot of people got liquidated on this. How do we know this? Well, just a quick look at the order flow. Well, typically speaking, I don't use liquidation charts, so I don't find them that useful. There we go. But we can see here, this is the one in question. So this was the high, and we came back up to the high. Again, another tiny little swing failure pattern of the high. And then since then, we had a huge cascade to the downside. Now, in the grand scheme of things, if you zoom out, this is nothing. This is a blip. But people at the moment, because they are in such euphoria, because of how it's trending, they are over leveraging themselves, no risk management at all. They're using liquidation levels as the stop loss. I mean, that's just not a way to trade. You're an absolute fool if you think that your liquidation price is an invalidation. It's not. You are liquidating yourself. And what did we do? 5-minute time frame. We just came down and we can see all these dots, all these liquidations. Okay, 118,000 liquidation contracts. Just in that little bit of 15-minute price action within this. Meanwhile, we're in the group waiting down here because this is one of the best, highest win rate strategies we have in the group. We're waiting down here, ready to long this and take it back up higher. Okay, take it back up higher. So rather than being the absolute degenerate fool that's once again identifying it, you might have even identified a range within this. Okay, had a range. Okay, another range. This was the high. Start of the day, came back down, came back up, peaked the high, just like we did back here. Peaked the high, came back down to the low, got the entry, and then we got the bounce up higher. Now, initially, you'd have been bringing this up towards a range high. What happened at range high? Well, even on the 5-minute chart, you can see it just blasted straight through. Came back tested the range high, and then continued the uptrend. So therefore, this is how you can let the trade run. To our next major zone up here. Okay, so if you understand what to do in these market conditions, this is great, but what you'll find is the moves down, typically speaking, is such a strong uptrend. Bear in mind, everyone is over leveraged, everyone is overconfident. You've been rewarded for very bad breakout habits back down lower. So now what you'll find is you'll get quick moves to the downside, and these moves will stop people out and they will liquidate people. So you've got to be careful with that, because if you look, zoom back out to the 30-minute chart. What happened after that event? Again, you're zooming out. It looks like nothing. It looks like nothing, doesn't this? But at the time, this liquidated. This small move here liquidated a lot of people. What did we do? We came up. A lot of volume into this high. In fact, some of the most significant volume we've seen in a long time on Bybit. And then what happened? Well, we just destroyed a load of people. And then we continue to meander up. So we flush out a load of positions, reset the open interest, and then just continue the grind up. Okay, so you've got to be really careful in these conditions. Yes, it's easy mode, but if you're down on the 1-minute chart and you are leveraging over the top for no reason and going all in on this and hoping for an absolute moonshot trade, one trade that's going to change your life, okay, you're going to get just as destroyed in a strong uptrend as you did on the way down from 69k. Okay, just be smart about it. Risk management. Don't go all in. You know, use wide stops, wide invalidations, not liquidations. That's not an invalidation. Okay, now I've had my rant and I've got that out of the way. Hopefully you've learned something there. If you have, hit that like button for me. Now, moving on to what I'm looking at next. Before we get into that, obviously, if you guys want access to our daily trading plans, Bitcoin, altcoins, Forex, stocks, any market with a chart, then first and foremost, come over to our website, links down in the description. Click this link here, you'll get into our free Discord. Now, I admit the free Discord is fairly quiet. There is a lot to learn within the free Discord, but it's fairly quiet because most of the members don't pop in there unless we start getting loads of questions. And if you do ask questions in our free Discord, me or one of the guys will pop in and answer your questions. Okay? We're a community. But obviously, if you want access to my daily trading plans and all of the learning content, the educational content, then click on the Join Us tab and come down. It'll cost you the grand old price of 79 quid a month or 100 USD. Or we brought back, due to popular request, the annual membership. So if you want access to all this, then come check us out, okay? And that brings us on to, obviously, getting access to our high time frame swing trade plans, daily trading plans. We stream 5 days a week on this. And then you've got all the educational content. There is a lot to run through, but if you are serious about wanting to trade and stop losing money, and you are determined to do this, then all the content is right here for you to become profitable. But you've got to put the hard work in and study it. Okay? Trading is not easy. A lot of people will make out that this is such an easy game. It's an easy way to make money. It's not. It's not. Bull markets, very easy to make money, but most people give it all back because they will hold on and they will just give it all back. So understanding how to trade is essential if you want to be consistently profitable in this market. Now, got my rants out of the way. Right, what we're looking at next. Well, last week we were talking about two things. We were talking about a fib from the high to the low. And then we were also talking about the volume profile within this. Okay. We were bashing our head up against the 707. And we were saying, flip this, then I'm going to be looking for the next sticky zone, which is going to be the 786. Why the 786? Because this is where the last of the major volume is. Here, on the volume profile. Okay? If we start flipping the 786, then realistically, we can start to discuss all-time highs with a caveat. Okay? So that's where we are right now. So, remove this. I'm going to remove this. I'm going to open this up. I'm going to stick on not the 382, I'm going to put on the 886, which is, if anyone understands Fibonacci, this is the last Fibonacci level before, realistically, contesting these highs. Okay, is this a majorly strong zone, in my opinion? No, I don't believe it is. Does it mean we can't reject here? No, we could reject here. Okay, but what we're going to think, we're still in this strong daily upward trend. In fact, before I do this, I'm just going to map out highs. This is the next major zone. Okay, so I'm going to come in. Okay, daily chart, zoom in, we can see here. Now, one thing you've got to understand with market structure is king. Market structure rules over everything else. Okay, we're making high highs, high lows, high highs, high lows. We're still doing this. Okay, so where we are right now, what happens if we reject in this zone? Let's talk about downside first. So if we do reject in this zone, and we start losing these local ranges, then realistically, we can start looking back down towards this sticky zone. So this last range that we're in, again, from last week's video, we can look back down there. If we do come back down there and start getting a bullish reaction, then we can look for long triggers. And again, looking to continue that trend. Because as long as we are above this on a daily time frame, we are still in an uptrend. So this could look brutal. This could look brutal. If it happened, this would be freezing numbers, a 15% drop to the downside. 15% drop to the downside. We saw how many people got liquidated in a 5-minute drop yesterday. So imagine how many people will be liquidated in a 15% drop. And this is why it's important. Lock in profits along the way. Skim profits if you have to. Move your stops. Don't be a degenerate. Don't think that it's never going to come back down, because it could. Okay? The market's very good at humbling people. So, as long as we remain above this structure here, we are still maintaining a daily uptrend. So we could come down all the way down here. Bear in mind, this whole move up, I've said this on the altcoin videos, this whole move up is thin. There's a lot of volume in it, but it's not created any structure on the way up. Just one straight line. So therefore, it can, as quickly as it goes up, it can also come down just as quick. Okay, you've got to be aware of that. So this will be the next major zone. the downside. Now, what happens if we come down lower than this? Well, the next thing to do is we're going to volume profile from the absolute bottom of the trend, okay? The absolute bottom of this current cycle to here. And we can see here. Look on this. Let's just get rid of these fibs. Clear it up. Make it look prettier. So we've got this volume, which is this zone here that we just discussed. If we start to lose that, then realistically we're coming back into this old range. Okay? If we do come back into this old range, then we're looking for that bullish structure to start forming. Once again, not just leaving limit orders and hoping for the best, because this could just go straight through. Who knows? We don't know what's going to happen. We want the high probability setups. And how do we get the high probability setups? We want to mark out the zones where we're interested in. And when price comes into those zones, or should I say if or when price comes into these zones, then we want to make an educated decision. Does it look bullish or does it still look bearish? Okay? Order flow, technical analysis tools, all this can help us with this assumption. If it's bullish, we look for long triggers and we continue trading. Okay? Bear in mind at this point, it would have been very early sign that daily structure is lost. However, weekly structure, monthly structure, still likely intact to the upside. Okay? So that's the downside. That's the two major areas I'll be aware of right now. Okay? This sticky zone, this sticky zone. Now, what happens about up price action? Well, if we can maintain this trend, and again, I'm looking on the macro here, can maintain this trend and continue coming up, get back above this last little bit of resistance in this zone. Okay? Zoom into the weekly so we can see this. This last little bit of resistance. Once again, you've got order blocks, supply zones, demand zones, whatever other style traders call it. It's the last sticky zone that we're in right now. But if we can get above that, then we can start realistically talking about all-time highs. Now, once again, at all-time highs, what happens, as you saw with those ranges that we had back here, that we've just been talking through, okay? This is just one big range with a range high and now a range low, okay? So what happens? Does price just go straight through, continue up? It could do. It could do. But we've also got to be aware of price could just peak above and come back down. Got to be prepared for all sides, okay? So be aware of this. If it does break through and continue, great, cool. We are in very much up-only market environment. But if we do poke above, again, this is probably high time frame stuff, it probably doesn't happen on a 1 minute chart. If we do poke above and come back down, then it's not going to look great, okay? If it does this, you don't want it to hang around here for very long. You want it to just get straight back up. Little deviation, a little over and under, and then continue. If not, then the same areas still apply. Okay? So what I'm saying is price can go up, price can come down. So I'm a trader, and I don't carry a crystal ball. Okay. Hopefully you've learned something today. Apologies, it's a bit of a longer video than usual. As I said, hit that like button if you enjoyed today's content. If you're not subscribed, consider subscribing. And until next time, gang, as you were. Bye-bye.